You're watching today's video technical update presented by FX Times. It is Friday, April 30th, 2010. I'm Fan Yang, your technical analyst, and I'll go over some developments in the Forex markets. As always on Fridays, we'll take a look at the Japanese yen crosses. We'll take a look at them individually and then assess which crosses are favored for more bullish outlooks and which are favored for bearish outlooks. This video is being produced at about 5:30 p.m. Eastern Time after the close of this week's trading session. Let's begin first with the euro-dollar pair. Here we have a daily time frame, and here we have the Fibonacci time extension. You can find that here in the two drop up or drop down list. And here in the middle we have Fibonacci time extension. What you do is, for example, here you wanna project the time it took to finish one correction to the next, because it appears that we have two correction patterns here. It's not reverse head and shoulders as it appeared a few weeks ago. Okay, so here we would extend, let me just go back to the cursor here. So basically we extend the beginning of this correction, which started here. You see this three waves connected by this, and then now we have another correction here. So this correction, when you extend it, you see, if you start the zero after the connective wave, so that goes over here. So basically this is where the pivot is, and now you basically have 100%, meaning that the time it took for this corrective pattern to finish, it's taken this corrective pattern also the same time if it is done. So there, you always feel that these patterns are complete prematurely, and the market always gives you a little more complexity. So I would still hold back, have some reservations, but maybe now let's look at the 4-hour time frame. Maybe this is the completed pattern when it finishes this last rally. So in the 4-hour time frame we break it down, so we see this thing that looks like a head and shoulders, actually two ABC waves, two zigzags held together. So this is double zigzag. Here there's a connective wave, and here we have double threes. You have a ABC, and then connected ABC. So basically we have two complex corrections that may be complete. Right now, in the short term at least, we have this projection here from our negative RSI reversal. So at least in the short term we would see a decline towards here towards 120. Let's see what the bottom of this line is, towards 122, excuse me. So short-term projection 122, and possibly continuation decline because this pattern we may have completed our consolidation. Okay, so look for topping, or look for this market to come down to test 122 and see if the market can break below that and actually break below this support, and then next week we'll take a look at the continuation scenario. Next we have a look at the pound yen pair, and the pair this week you see struggled to break above this previous high here and instead came back down to the consolidation zone. However, we saw this positive RSI reversal, so there is a projection to the 147 area, maybe a little higher, but you see we may still have another wave down before our rally, so this may not be the pivot for this rally. If we project our wave here to this wave, you see this could be 1, 2, 3, 4, 5. This fifth wave would be also to 147. Okay, so now let's look at the 4-hour time frame, and by the way, this would meet the 50% retracement of this decline, and as well as challenge this 200-day moving average. Now let's look at the 4-hour time frame. We see a possible bullish Gartley forming. You see here very strong reversal candlesticks in the short term, so there seems to be at least this projection for the moment down to 78.6% retracement, 140.77. So that's the short-term expectation, and what we could find from this after this decline is whether the market can support the momentum, keep the momentum in the bullish range. If it supported above 40, looking at the daily here, we would likely hit this 147 next week. Okay, so that's the bullish scenario. Now, if the market continues to decline and breaks this important power line right here at 139.50, then we have to invalidate this bullish scenario. Remember the dollar yen, I mentioned that it was testing a very major low. This actually goes way back to the left of this chart. So the reversal was on my mind, but it's all about timing. And now we have some more higher pivots. There's more confidence for traders to go long now. And you see this moving average cross, this 50-day moving average cross the 200, also giving bullish outlooks more confidence. Now in the short term here, we do have another RSI, positive RSI reversal with a swing projection to 95.40. So that's the short intermediate term for this current swing. However, you see here before this top at 95, we are having some difficulty passing this this resistance here. There's some risk aversion to end the week, so the market could not really take off. Here is a 4-hour time frame. You see the market actually attempt over the European session, Friday European session, to break above this previous high here. However, it was a risk-averse day, and the market came back down to this consolidation zone. Here we see the RSI also give you a positive RSI reversal, but we're not going to make that projection here. This is basically a chance to test the resolve of dollar yen bulls, and at the moment, if this is the bottom to start next week, so basically we should be looking next week at where the bottom is. If the bottom comes all the way down to this previous bottom, that means the bulls are not ready to take over the market and consolidation should continue. But if the market can rally from this bottom without making a lower than these previous lows of this consolidation, then that's a very strong sign for the bullish outlook towards 95.40. Okay, so that's the dollar yen in the short intermediate term. Okay, we're going to go over the Aussie and Canadian dollar yen very quickly here. Aussie yen, Canadian dollar yen are almost look the same. Here's the Canadian dollar yen, Aussie yen in the daily. Let's look at the 4-hour time frame. We see this ranging action, Aussie yen, and in the CAD yen, same kind of price action. So both of them are very strong as they are current commodity currencies. And now let's look back at the daily for the Canadian dollar pair. Zooming out, we see that here we have some space to go, some more headroom before we hit the previous power zone here. In the Aussie dollar, however, we have already hit this power line at 88. So there's a little more resistance for the Aussie yen than the Canadian dollar yen, and but they are both strong. Now let's compare all these. Like Aussie and Canadian dollar yen has been the stronger currencies, of course, because they're related to the commodities. The US dollar yen has also been strong coming out of a bearish mode, but the euro yen and the pound yen are still behind. They are still pressured. And going back here, see the pound yen here in the daily, you see they are pressured, although the pound yen more than the euro yen is showing some resilience and trying to attempt a rally. But in the euro yen, you see here, the rally has been very weak compared to the pound yen, and we see all these attempts being thwarted, being faded. In the pound yen here, we do see them faded, but there is definitely more pressure on the euro than the pound at the moment. So in order of strength, I would say the CAD and the Aussie are the stronger ones, but the US dollar yen probably has more headroom than the other two. But the euro and the pound yen are the weaker, or the weakest too, at the moment. So the pick for me would be the dollar yen among these currencies for the bullish outlook, and for the bearish outlook, it would be the euro yen. And that's all for this week. Check out fxtimes.com for other technical and fundamental analysis, as well as educational live events. Once again, I'm Fan Yang, your technical analyst here at FX Times, wishing you a great weekend.